Welcome, let's jump right in. Did you know you can now only check your bank balance on UPI 50 times a day? Yeah, it's a small change, but it's part of a huge wave of new rules in tech that are totally reshaping how we handle our money. So let's get into it.
No, really, think about it for a second. Was it once? Maybe 5 times? For millions of us, it's just this automatic thing we do. But that simple little habit, it just got a major update. And the new official limit is, well, you might be surprised.
50. Yep, that's the new magic number. The UPI guidelines now say you get 50 manual balance checks a day on each app. Now that might sound like a lot, but it's really just the first sign of a much bigger sea of change that's happening to your finances right now.
So let's start there, with the stuff you use every single day. Banks are getting seriously creative, rolling out some really cool new features that are designed to make your money not just safer, but also easier for everyone to access. Okay, so as online fraud gets smarter, our security has to get smarter too. Check this out. Access Bank just launched an industry-first feature they're calling Lock-FD. The best way to think about it is like a digital deadbolt for your fixed deposits. It adds this extra super important layer of protection against anyone trying to mess with your money online.
And you know, all this new tech isn't just about security. It's about making banking work for everyone. The India Post Payments Bank has now rolled out Aadhaar-based face authentication. This is a total game changer, especially for the elderly or differently abled folks who might find fingerprint sensors or typing OTPs tricky. Banking is literally becoming as simple as looking at your phone. Even the financial products themselves are getting a much-needed upgrade. Take Tata EAII's new Shubh Shakti term plan. This isn't your standard one-size-fits-all policy. It is built from the ground up for women. We're talking about 15% lower premiums, the ability to take a break from payments after having a child, and even support for health issues like PCOD and IVF. Pretty amazing, right?
All right, let's pull the camera back a bit. We've seen what's in your wallet, but what's going on inside the banks themselves? It's a super competitive world out there, so how are the big players staying on top? Well, it really comes down to 2 things: their people and their spending.
For years, a huge headache for private banks was that employees were always leaving. But just look at this trend. Attrition rates are dropping, and fast. IndusInd Bank, for example, went from a massive 51% all the way down to 29%. But the real star of the show here is ICICI Bank. Their rate is down to just 18%, the lowest in the industry. They're clearly doing something right to keep their talent happy.
So with a more stable team, where are they putting all that focus and money? Ads. And lots of them. Indian banks spent nearly 5,000 crore rupees on advertising in FY25. ICICI Bank is leading the pack by a mile. It just goes to show you how fierce the battle for your attention and your business has become. But there's a twist.
And here's the crazy part. Even though their ad budgets are going through the roof, the actual return they're getting is dropping. Why? Could be the market's just too crowded, or maybe we're all just tired of the noise. For a lot of these banks, the money they make for every rupee they spend on ads has just plummeted. HDFC Bank, for one, saw its ad efficiency fall by 70% in 5 years. They're shouting louder, but fewer people are listening.
Now, all this intense competition at home is happening right as the rule makers are trying to get more global players in on the action. So let's zoom out and look at the people setting the rules of the game, the Securities and Exchange Board of India, or SEBI. They are making some huge moves to make our markets way more attractive to global money.
So meet SWAGAT-FI. You can basically think of it as a red carpet, a VIP fast track for big, trusted foreign investors. We're talking sovereign wealth funds, central banks, that kind of league. Instead of getting lost in a maze of paperwork and approvals, they now get one single, simple window to invest in India. It makes the whole thing faster, easier, and a lot more appealing.
And here's why that's such a massive deal. Before, foreign investors had to climb a mountain of paperwork and deal with constant KYC reviews. Now, after SWAGAT-FI, it's one window, one process, and they only need to do their KYC review once every 10 years. That is a huge incentive to bring more foreign cash into the country.
So, as India gets easier for outsiders to invest in, what's happening on the inside? Well, one of the biggest stories is the absolute explosion in mutual fund investing by everyday Indians. This is seriously one of the greatest wealth creation stories of our generation.
Just look at that number, 74.4 lakh crore.
That is the total amount of money being managed by the Indian mutual fund industry right now. And get this, that number has grown more than 7 times in just the last 10 years. It shows a huge shift in how Indians are saving and building for the future.
So where is all this money going? Well, equity is king. Almost 60% of all that mutual fund cash is in equity funds. That shows a real hunger for growth and a deep belief in the long-term story of the Indian stock market.
And if we look at the very latest numbers, that momentum is still incredibly strong. Just in the last quarter, nearly 4 lakh crore of new money poured in. But here's the interesting part. The debt segment actually got the biggest piece of that pie, pulling in 2.39 lakh crore. It might be a sign that some investors are looking for a bit more stability right now.
So what does it all mean when you put it all together? We're seeing 3 huge forces all hitting at once. Super fast digitization in our daily lives, big regulatory changes making our markets more attractive, and this fierce competition at home that's pushing everyone to get better and better. And that kind of leaves us with one final thought. From banking with your face and insurance that actually understands women, to VIP lanes for foreign funds and this historic mutual fund boom, these 3 forces, digitalization, regulation, and competition, are building a totally new financial world. The big question is, which one do you think is going to have the biggest impact on you?